While everyone's obsessing over Bitcoin's bounce and Ethereum's next move, there's a token that's been absolutely crushing it under the radar. PiCoin just outperformed Bitcoin, Ethereum, and XRP combined over the last 2 weeks, and almost nobody noticed. We're talking 9% gains, while the market was still licking its wounds. But here's where it gets interesting. A whale just dropped $91 million into Pi, major partnerships are rolling out, and the technical setup is screaming breakout. So why isn't anyone talking about this? Welcome back to the channel, Crypto Fam. If you're tired of missing the early moves while everyone else is chasing pumps, you're in the right place. Hit that like button, smash subscribe, and turn on notifications because today we're diving into PiCoin's stealth rally and why it might be gearing up for a run to 50 cents. Let's set the stage. PiCoin has been the market's quiet overachiever lately. According to recent performance data, Pi has carved out gains across nearly every time frame, rising over 9% in both weekly and bi-weekly periods. Now sure, it's still down about 7.7% from last month's peak, but here's the thing. After hitting a low near 20 cents on November 5th, Pi bounced hard and reclaimed the 24-cent region. That's not just a random pump. That's a token showing serious strength when the rest of the market was falling apart. And before you say, it's just riding Bitcoin's coattails, let me stop you right there. Yes, Bitcoin's recovery from 82,000 back toward 87,000 gave smaller assets some room to breathe. But Pi didn't just bounce, it outperformed. While dip buyers were piling into BTC at multi-month lows, smart money was also rotating into Pi. That tells you something about the conviction behind this move. But wait, there's more brewing beneath the surface. Pi Network isn't just sitting around hoping for a miracle, they're actively building. The team recently revamped the Pi App Studio, making their development tools easier to use and way more capable. Now why does that matter? Because better tools mean more developers, and more developers mean more apps, and more apps mean more users flooding into the ecosystem. It's the classic network effect, and we all know how powerful that can be when it clicks. Here's where things get spicy. On November 27th, Pi Network announced an investment in CiDi Games, a company building games specifically for the Pi ecosystem. The official statement reads, "The partnership between Pi Network and CiDi Games is designed to expand the real-world utility of Pi and further expand and support gaming in the ecosystem." Gaming, real-world utility. Those aren't buzzwords anymore, they're revenue streams. And trust me, when tokens start generating actual use cases instead of just speculation, prices tend to follow. But that's not all. Just weeks before the CiDi Games announcement, Pi invested in OpenMind, an AI company. This partnership allows node operators to offer services to OpenMind and potentially other AI companies down the line. So now you've got gaming and artificial intelligence being integrated into Pi's ecosystem. If you're not seeing the vision here, you might need to check your glasses. Now let's talk catalysts, because Pi has several bullets loaded in the chamber. First up, the protocol upgrade. Pi is migrating from Protocol 19 to Protocol 23 on the Stellar network. Technical jargon aside, this upgrade improves smart contract efficiency and boosts scalability. Translation: faster transactions, lower costs, more capacity. That's the trifecta every blockchain project dreams about. Second catalyst, MiCA approval in Europe. There's a legitimate chance Pi receives regulatory approval under Europe's markets in crypto assets framework. Why? Because the developers have invested heavily in verifying all tokens that move to the mainnet. They're playing by the rules, which means they might actually win the regulatory game while others are still fumbling in the dark. And when you get MiCA approval, you're not just another memcoin, you're a legitimate financial asset in the eyes of European regulators. Third, and this is the big one, Pi hasn't been listed on major exchanges yet. No Binance, no Upbit, no Coinbase. For a top 50 coin, that's absolutely wild. Most tokens would kill for that kind of market cap without major exchange support. So what happens when Binance finally lists Pi? I'll give you a hint. It rhymes with price explosion. We've seen this movie before with other tokens, and it usually ends with parabolic moves. Now, about that whale. According to on-chain data, one major accumulator has quietly stacked over $91 million worth of Pi tokens. 91 million. That's not retail FOMO. That's institutional level conviction. When whales are buying while everyone else is distracted, you pay attention. These players don't throw around 9-figure positions on hopium. They know something the market hasn't priced in yet. Okay, let's break down the technicals because, honestly, the charts are painting a beautiful picture right now. On the 8-hour time frame, Pi has been climbing steadily since bottoming out at 20 cents and 0.3 of a cent on November 4th. The average directional index, which by the way, measures trend strength, has climbed to 27 and continues pointing upward. That's a clear signal that momentum is building, not fading. Pi is currently trading just a bit above the 50-period moving average and is sitting comfortably above the Ichimoku cloud. For those who don't really speak chart, that means Pi has both short-term and medium-term support pretty much locked in. The path of least resistance? Yep, it's up. So, here's the key level everyone needs to watch, 29 cents and 35 of a cent. That's the October high, and it's the last major resistance before Pi enters price discovery mode toward 50 cents. According to technical analysis, if Pi flips 29 cents and 35 of a cent from resistance into support, the 50-cent target becomes not just possible, but probable. That's a 100% gain from current levels. Not too shabby for a token most people are ignoring. This setup honestly reminds me a lot of early 2023, when certain Layer 1 tokens were consolidating under the radar while Bitcoin totally stole the spotlight. Those tokens, they didn't just recover, they multiplied. Pi has the fundamentals, the partnerships, the whale accumulation, and the technical setup. All the ingredients are there. The question isn't if Pi moves, it's when and how violently. One thing I'll add here, Pi's ability to hold 24 cents after bouncing from 20 cents, it really shows some remarkable resilience. In a market where most alts just bleed out during Bitcoin corrections, Pi actually gained ground. That's not luck, that's structural strength. Someone, somewhere, is defending these levels with some serious capital. The gaming and AI partnerships also can't be overstated. We're entering a cycle where narrative matters more than ever. Tokens need stories, and Pi is building one that combines Web3 gaming, artificial intelligence, and real-world utility. That's a cocktail designed to attract both retail enthusiasm and institutional interest. Alright, crypto fam, that's the Picoin situation in a nutshell. We've got outperformance, whale accumulation, major partnerships, protocol upgrades, potential European approval, and a technical setup pointing toward 50 cents. This isn't financial advice. It's just the facts laid out so you can make informed decisions. If you found this analysis valuable, do me a favor and hit that like button. It genuinely helps the algorithm push this content to more people who need to see it. And if you haven't subscribed yet, what are you waiting for? We're covering the moves before they become mainstream news. Want more deep dives like this? Check out my other videos. Before you go, quick reminder, cryptocurrency is incredibly volatile and risky. Never invest more than you can afford to lose. This video is for educational and entertainment purposes only, not financial advice. Do your own research, manage your risk, and trade responsibly. Stay safe out there, and I'll see you in the next one.